Today we are going to discuss what is the GST. GST Kya Hai? GST is the goods and service tax. It is a levy of tax, indirect tax on supply of goods and services or both. It has replaced many indirect tax systems. I will come in subsequent slide which are the taxes, center taxes, state taxes which have been replaced by the GST. It is levied on the supply of goods or services or both. It is a comprehensive multi-stage destination-based tax that is levied on every value additions. But if we go deeper into the act, we will not find any place where it is specifically written that this is a destination-based tax. So why we are saying that it is destination-based tax? We will come to place of supply rule, place of supply under IGST, where the actual principle of place of supply is destination based. So destination based principle emerges from the place of supply. We have now the list of indirect tax which have been subsumed in the GST. In the left part, center excise duty, additional duty of excise, service tax, surcharges, various type of surcharges, Swachh Bharat cess, and various other type of surcharges have all been subsumed in the GST. Right hand side are the state taxes which are levied by the state governments. They have also been subsumed in the GST. Prior to GST, there was a value added system in the limited extent. In the limited extent, we will talk and we will come to know from this diagram where a manufacturer is buying the raw material. At the time of buying the raw materials, supplier of the raw material is charging VAT, and the manufacturer, when manufacture these products, pays VAT as well as excise duty. VAT is the state tax and excise duty is the center tax. So against payment of the VAT of the state tax, he is taking credit of the VAT paid on the input. And he is also paying the excise duty against which excise duty paid on input is also taken as a VAT. This price plus VAT plus excise duty is charged to the wholesaler. Wholesaler further charge VAT and take the credit of input tax and sell to the retailer. Retailer also add VAT and sell the good to the final consumers and taking credit of input tax paid on the purchase from the wholesaler. This chain is perfectly okay. But the problem is with the CST. If the CST is payable, then the VAT payment on the input is not fully VATable. CST rate was 2%. Manufacturer is charging 2% and in some cases paying VAT of the 5%. So this VAT credit is available to him, but up to 2% only. So 3% is the cascading effect, which is not being passed on further, or which is not being credit is not taken. So this is happening. And even further, there are the services. Services are the not the manufacturer. So this there was a separate levy of service tax. Although later the provision was made to take the credit of service tax against the excise duty payment, but there is a lot of complications. It has to be up to the stage of manufacture only those services. But the services which are after manufacture, they are not vatable. So there is a lot of issues in the VAT systems prior to GST. And we will now come to the constitution amendment which was made to bring the GST. Why the constitution amendment was done? Because as per Constitution of India, certain items sale is an entry against which state governments are authorized to make tax collections, and against manufacturer or services only the central government can levy tax. But now, after the introduction of GST, both state government and central government has to charge CGST and SGST on the same value of supply. Therefore, state government has to leave his power of taxing sale, and central government has to leave his power to tax on the manufacture or services. And these both things have to be shared by center and state. And as per GST, it is shared 50-50. 50% is the center and 50% is the state government. Further, there were alcohol for human consumption. This power is still with the state governments. They can tax. This has not been subsumed in the GST. This has been especially excluded in Section 9 of the CGST Act. 5 petroleum products, crude oil, diesel, petrol, natural gas, and aviation turbine fuel. Although these are made a part of GST, but GST Council has to take decisions from where, from which date GST will be charged on these items. There is a lot of demands. We continue to see the news that persons are demanding or business are demanding that these should be bought within the jurisdiction of the GST. But as you know, that GST Council is a constitution of the state and center team, and they are earning a lot of money from these petroleum products, so they are not going to give it. So we will come to the constitution of the GST Council in the later slide. And tobacco, and part of a part of it has been part of the GST, but being a commodity which is not good for the public, additional excise duty has been generally been levied by the central governments. Similarly, the entertainment tax levied by the local bodies, here the power still remains with the state governments. Now we will come to the constitution of the GST Council. Chairman of the GST Council is the Union Finance Minister. Vice Chairman, it is chosen among the minister of the state governments, because state governments, every state, one minister is a part of the GST Council, and among all the state they choose one state finance state minister, which will be the vice chairman. Member MOS finance will be the member of the GST Council from the central government, and all the minister of the finance oblique taxation of the state or will be the member of the GST Council. Quorum is 50% of the total member. If there are 30 members, then 15 must be present to run the meeting of the GST Council. And what should be the vote share? Central government enjoy 1/3 voting power, and state governments enjoy 2/3 voting power. The state government has significant voting power, which is 66.666%, and central government has 33%. And still we say, and even some politician says, that the central government has introduced GST on the small items, which is of daily use, etc. Although the central government voting share is only 33% and the state government share is 67%. And without 75% majority, nothing can be decided by the GST Council. Even if we say कि 33% government is central government is for this resolution, so balance 42% of the state government has agreed. And council to make recommendations on every matter relating to GST, including laws, rules, and rate. What should be the rate? It should be 18%, it should be 20%, it should be reduced, it should be increased, or on what new items it has to be on the GST. Suppose there are some items where there was 0%, now they can come to 5% GST will be levied. So this can be decided only by the GST Council. And GST is a new act, so everybody was worried what will be the revenue, because previously they know what is their expected sale tax collections. So in that case, it has been decided by center that whatever the taxes state government is earning on 2015-16, this will be taken as a base. And further, every year 14% growth will be considered for the state revenues. Suppose one state, UP, has 20,000 crore sale tax collections in 2015-16. So 14% of that is 2,800 crore. So in 16-17, they have to expect 24,800 crore, and similarly it will be added every year. Suppose the expected collections of 21-22 of Delhi, or we can say UP also, is suppose 30,000 crore. Against that, actual tax collected under GST is 26,000 crore. What will happen? In that case, 25,000 crore, which was actually collected, versus 30,000, which was calculated based on 2015-16 base and 14% growth rate. So 5,000 will be compensated by the central governments. So how the central government is going to compensate? Because central government is not going to bear the loss. Then a mechanism was found to compensate the state through the levy of the cess. Cess will be levied on specified luxury and demerit goods, and a fund will be created. And out of that funds, any state where the GST collections is below expected sale tax growth, yeah, expected revenue growth based on 2015-16 model has to be compensated by the state government out of these funds. Now we will come to the main feature of the GST. What are the main feature why GST was introduced? All the transactions and processes is through electronic mode. We have seen in the registrations that even the registrations has to be made electronically. Even the return has to be filed electronically. Everything in GST is being done by electronic means. Previously, we used to say that government gives the forms, we have to manually fill the forms and then deposit with the department, and then assessment is also manual, not on the portal, or uh, even the physical documents. There is a lot of physical document which has to be shown to the authorities. Now everything is on the digital platform. Registration for the sale tax for GST purpose is on PAN based, and previously it was not PAN based. Registration only if the turnover more than certain threshold. Although voluntary registration can be taken, and what is the threshold turnover that has been defined in section 22 of the CGST Act, which says 20 lakh for the normal estate and 10 lakh for the specified category, special category estate. But there are notifications which says in case of goods in the normal estate, if the state government so opt, it can be 40 lakhs rupees per annum. Similarly, there are separate registration requirements, section 23, 24, etc., which has been covered in my presentations on in my video on GST registrations. Even in the GST process, GST registration process, I have mentioned that the assessing office, the proper officer has to revert back within 7 working days, and if he does not revert back, then the registration is deemed. Input tax credit is available on all the inputs used for the purpose of business or in the course of business. There is a definition of business we will cover separately because this is a big topic. So that we will cover separately, and this is basically a fundamental discussion on what is GST. Although there are certain inputs on which GST credit is not available, it is on the food and beverages and personal consumption items, etc., beauty parlors, health insurance. Tax can be deposited in the GST through the internet banking NEFT, RTGS, debit credit card, or even on the over the counter. And now it has been become very friendly because you can link your bank account with the GST portal and deposit challan directly over there. And it reduces a lot of time. Although in the initial phase when the GST was implemented, we faced some problem of the credit of money in the GST portal, and because bank was taking some certain times, there was not proper linking, etc. But now those problems are no more there. Further, there has been concept of TDS on certain specified categories. Uh, it is just like the same concept as is income tax, and this TDS has to be deducted by the government, PSU, etc. when goods are being supplied to them. The reason being to bring the supplier in the tax net of the GST. Similarly, the concept of TCS has also been bought in the GST, and it has been on the e-commerce operator, uh, Ola, Uber, etc. Because if it would not be there, then there would be no GST chargeable on taxi services. How can you collect the tax from the persons who is operating a taxi? So this is the innovative provisions that has been bought in the GST, which were not available in VAT system previously. Refund has to be granted within 60 days from the date of applications, and government has also given the provisional release of 90% of refunds to the exporter only in 7 days. Interest is payable if refund not sanctioned in time, and refund is also directly credited to the bank accounts instead of giving the manual check, etc., and then assessing getting it deposited in the bank. A lot of detailed transition provision has been made for transfer of credit from the excise regime or center sale tax regime or VAT regime to the GST regime. There is a lot of transition provisions in the GST, and trans 1, trans 2 forms were there. Even the stock remaining on the date of transition, so what credit has to be taken for them. So there was a lot of rules which governs how the transition credit has to be taken, and what credit is available and what credit is not available. And in GST, there is a separate procedure for the job work which was not there in the prior systems, and anti-profiteering provision was also bought in the GST, so that manufacturer uh, has to pass the benefit of reduction in the GST rate to the consumer, and if they do not pass, then the penalty can be levied on them, and this differential can be recovered from them. And we have seen that a lot of recovery has been made from certain companies, uh, um, mainly from the FMCG company and other companies also, where the rate has been reduced, but they have not passed on the benefits. Now we come to the benefit of the GST. What are the benefits due to which GST was introduced? First benefit is the reduction in the cascading of the taxes. Cascading of taxes means tax on tax, or some tax credit is not being allowed. We have discussed earlier. Then in case of the CST sale, CST rate was 2%, and if local VAT rate is 5%, then 3% credit is not being given, and only up to 2% credit is being passed on. And for the there is an excise duty liability. Suppose 100 rupees is the goods, 10% is the excise duty, so 110 rupees, and over that, on the 110 rupees, there is a VAT liability. Why VAT is on 110? Why it is not on 100? The base may be same, but not. This is a cascading tax on tax. If the uh, excise duty rate increases, then VAT also increases. And second benefit is the overall reduction in prices. When there is a seamless system of credit, input tax credit, then overall cost of production will go down, and this will lead to reduction in the prices. And third major benefit is the common national market. Tax rate will be the same in all over the country. Manufacture previously there was a system of a stock transfer. A lot of persons are manufacturing in one state and transferring the good to the other state to avoid the CST and then selling it. So there is a lot of infrastructure made for this go down, and selling in each state to the directly uh, wholesalers or retailer to reduce or to avoid CST. But in GST systems, all the credit are available. If even if the manufacturer in the Maharashtra and they transfer the goods to the Delhi, then first IGST charge, and IGST credit is available against the payment of CGST, SGST in Delhi. So there is no cascading effect of this, and no reason to establish the systems of go down, etc. Although if it is for the operational reason, then it's okay, not for the tax avoidance purpose. So this has created a common market where efficiency is more important compared to this tax gimmick. And this will also benefit to the small taxpayer, because now they can file return, etc. online. And this is the self-regulating tax systems where government has said that they have a faith on you. You have to upload your invoices, and whatever the invoices you upload of the tax, you have to pay tax on it. Similarly, whatever is the input tax credit available to you, you can claim credit on this, and in form 3B, you can pay the net tax. So this is a lot of fact government has put on the taxpayer, and this is completely electronic tax systems where everything is linked. And this has also promoted the simplified tax regime. What happens previously when anybody was practicing sale tax, and suppose he is in the NCR, Delhi, then he has to take care of everything. He has to see the Delhi Sale Tax Act. He has to see the Haryana Sale Tax Act. He has to see Rajasthan Sale Tax Act, and he has to see the UP Sale Tax Act. All the acts are different, notification are different, everything is different. So it is very difficult for him to understand all the systems and do the practice of all the systems. Even the businessman is also puzzled. What is the tax systems of different states? Now, after the introduction of the GST, there is only one SGST. Most of the rule of the SGST and CGST are the same, and provision are similar. Notification may be somewhat different, but ultimately it is a common act. And further, the multiplicity of the taxes has come down because a lot of taxes have been subsumed in the GST, and now only one tax is there. And this is a consumption-based tax. Previously, tax was on the productions, and now it is on consumption. Any state which is consuming higher amount of goods or services has will collect a higher amount of tax, and this has also abolished the CST, which is the major problems of cascading effect. But it was also very necessary. Otherwise, there will be a lot of problems which state to charge this uh, uh, how the inter-state sale will happen without this CST. Export has been made zero rated so that input tax credit is available, and this is also giving protection to the domestic industry by way of levy of IGST on import. In summary, we can say that GST is a very good legislation in India after the independence, and this is very good in direct tax systems. And recently, we have seen that the revenue collections from the GST is now crossing around 1,50,000 crore, which is a 1,50,000 crore, which is a very big amount, and it will continue to increase. And we hope that these systems will show the way in the future for the government to also correct the income tax law. Thank you for participation in today's session.